Welcome back to the channel, my friends. I recently came across some data on one of the largest credit bureaus in the US, and frankly, it made me sick. So, of course, I have to share it. Join me as we uncover the new shady business practices of Equifax. Now, there's a lot to cover here, and we got a bulk of this from Matt Stroller's Substack and a few people from our community. So shout out to those people. Thank you again for providing the data. Let's start late last year, where the CEO of Equifax, the current CEO, Mark Begor, presented at a Goldman Sachs conference for investors and openly told investors how much market power Equifax has in the business of selling income verification services to creditors. Now, I know what you're thinking. Wait a minute. I thought Equifax was a credit bureau that only helped furnish credit data to make sure that we're all paying our bills on time and built a credit profile for us. That's true. They are one of the largest next to TransUnion and Experian, but it would also appear that over the last 4 years or so, they have been aggressively getting into the income verification business and turning themselves into a mini IRS. And I quote, "We have meaningful pricing power because only Equifax has that income and employment data," Begor said. Equifax aggressively raises prices on the Work Number product line annually and has, according to Begor, already got our January 1st, 2023 price increases in the market. Long term, he says, we have an ability to grow price well in excess of GDP. Now, naturally, this is fairly shocking stuff to come from a CEO who should know better than to confess to monopolization. Only it seems as if Begor wasn't confessing, he was bragging. Male ego once again proving how valuable it is. Here's part of the audio. Understand, I'm not going to play the whole thing and I don't want to get copy struck or have them come after this video because I want more people to see it. So we're going to insert a small clip now.
We have meaningful pricing power in that business. I wouldn't put it in the same zip code as FICO, but we have a very unique data asset just like they have with the FICO score. Only Equifax has that income and employment data. So, we bring price to the marketplace every year. We've already got our January 1, 2023 price increases in the market. They went in a couple months ago. So we know what price is going to be in 2023. And we have more pricing power here than we have in other businesses. And if you think about 4% from price and product, decide how you split the 4. I won't do it for you, but we have an ability to grow price well in excess of GDP.
And I will link the full video in the description below. You can check it out for yourself. Just when you think, why would someone be so dumb enough to openly brag like that? But then you have to remember that Equifax's controversial behavior is legendary at this point. Equifax is known for a few things. First off, it's known that they are by far the hardest of the 3 credit bureaus to get wrong creditor information removed by calling, sending in letters. They are the hardest. And secondly, it's known for the 2017 data breach, which was a massive scandal. They accidentally leaked the personal information of over 147 million people. The FTC later fined them at least $575 million, up to $700 million as part of a global settlement. The CEO retired, the CIO, and the chief security officers were all forced out. It got so big they even created a website for you to file a claim at. It's actually EquifaxBreachSettlement.com. Now look, I know that you're used to getting these piddly, small, little $25, $5 checks for the settlement, but this was a real deal settlement that they offered. The first offer for everyone was free credit monitoring or up to $125 cash payment. But also there was provisions for those who actually experienced identity theft because of this security breach of up to 20 total hours at $25 per hour for any professional that you had to bring in to help, and up to $20,000 in losses. There's nothing to scoff at, and the site is still open for submissions to this day. What's interesting about all this, though, is that through this huge fumble, the firm did not suffer any long-term reputation damage, which is impressive to say the least. Now, we can explore more on that later at another time. What I want to cover next is the product offering that they call the Work Number, which is a business line that bundles data about the incomes of hundreds of millions of people and sells it to interested parties like lenders, landlords, employers, and government agencies. This is a terrifying database they are building out. A quick scroll through their press release/news page, and it looks like they have been on an absolute buying frenzy of data furnishing companies as of late. The Work Number provides income and education verification, property verification. It matches social security numbers to names and date of births, and provides IRS tax transcripts on individuals as well. Don't worry, they're just providing the consent forms for you to then approve and verify. They aren't illegally gathering this data from the IRS, at least not yet. Kidding, joking, don't sue me. It makes sense though why they've pivoted into this business model. Lindsay Davis, head of markets at Atomic, estimated the total addressable market for payroll connectivity and data software is currently around $10 billion. Alex Johnson, director of fintech research at Cornerstone Advisors, said the market could be bigger. Pinwheel CEO Kurt Lin launched his startup 3 years ago to chase what he called the holy grail of fintech, connecting payroll data to pretty much any app. There's an incredible wealth of information that has never really been programmatically unlocked before. Things like who you are, how much money you make, what you pay in taxes, he told Protocol. Payroll data is potentially more valuable and richer, covering other key information such as 401k contributions, taxes, and even consumers' vacations and sick day tallies. Even travel companies might want to look at this. Payroll is like the top of the waterfall, Johnson said. It's where you get all that from. There's a set of things you can do with payroll data that hasn't been done well with data further down the stream. Smulik Fishman, CEO and founder of Argyle, another payroll data software company, said coming up with new uses for this information has been one of the most fascinating parts of this business. Every week we get a new idea of what this same data set and same platform can be used for, he said. Now, I'm sure you've heard of Plaid, by far one of the biggest names in third-party data furnishers. Well, did you know that they already have a class action lawsuit that's been established with a $58 million settlement fund? Here's some of the details from the actual settlement page. Approximately 5,000 mobile and web applications use Plaid to enable users to connect the app to the user's bank accounts. This class action alleges Plaid took certain improper actions in connection with this process. The allegations include that 1, they obtained more financial data than was needed by the user's app, and 2, obtained login credentials, that's your username and password, through its user interface known as Plaid Link, which had the look and feel of the user's own bank account login screen when users were actually providing their login credentials directly to Plaid. Plaid denies these allegations and any wrongdoing and maintains that it adequately disclosed and maintained transparency about its practices to consumers. I would strongly disagree. Also, I had no idea that they already had 5,000 integrations personally. Equifax is the only one of the big 3 credit bureaus that also collects information about where you work, and that is the monopoly Begor was bragging about at the investor meeting late last year. Let's dive deeper now into that work number and see what we can uncover. Let's go all the way back to the beginning. The original work number product came from a company called Talx, or TALX for short, which was founded in the 1970s and that Equifax bought in 2007. From 2002 to 2005, Talx had bought up 7 rivals, consolidating the verification and income and employment business. Immediately after this acquisition spree, Talx raised prices and forced customers to move from buying annually to signing long-term multi-year contracts. Additionally, Talx had non-competes and non-solicitation agreements with its employees, which further locked up the market. Now, here's a visual representation of how the work number process works according to a 2007 slide about Equifax's $1.2 billion acquisition of Talx, which also happened that year. The CEO at the time was Richard Smith. He had this to say in August of 2017. That acquisition, by the way, I don't know if I'm proud of this or not, but it's worth about $9 billion today. This is the same CEO that botched the response to the data breach. He ended up retiring at least $18 million richer, according to Fast Company. In 2008, the Bush administration, FTC, sued Equifax over acquisitions and unfair methods of competition. It was a creative complaint, with the chair of commission, Bill Kovacic, I think is how you pronounce that, looking skeptically at a series of small acquisitions instead of one big one. But the FTC didn't seek to undo any of those mergers. Instead, it signed a consent decree forcing Talx, now Equifax, to let customers out of long-term contracts and employees out of non-compete agreements. These consent decree obligations ended in 2017. Ultimately, this FTC action, because it didn't require a breakup, didn't restore competition in the market or really fix anything at all, and has now allowed Equifax to fortify its monopoly. Equifax's Talx subsidiary was even caught violating the Fair Credit Reporting Act just 2 years later, and the company is still a merger machine, purchasing small and large firms nearly every year. For example, just in 2021, it made $3 billion in acquisitions, buying Higher Tech and I2Verify. After the consent decree ended, the exclusive arrangements came back. ADP, Intuit, Paycor, Prism HR, Rippling, and many other providers of outside payroll services have deals with Equifax to turn over or sell records. An insider reported recently that Rippling sells to Equifax, but Rippling has a deal with a smaller, more privacy-sensitive broker called TrueWork. So do large companies. In fact, in 2017, Joel Winston at Fast Company reported that 75% of the Fortune 500 companies, 85% of the federal government workforce, entire state governments and agencies, courts, colleges, and thousands of small businesses nationwide handed over their data. Facebook, Amazon, Oracle, Google, Walmart, Twitter, AT&T, Harvard Law School, and the Commonwealth of Pennsylvania do too. The number of entities handing over this data has gone up dramatically since then. And Equifax pays many of these entities for their employee data, turning human resources into a revenue generator. Of course, the employees don't know their own data is being sold by their employer. And even small businesses who use payroll services like ADP don't realize their data is actually being sold. Now, you can opt out of this, but you have to tell the payroll provider directly. The net effect of these arrangements is that smaller players in the market, such as Experian Verify, Truework, Thomas & Company, CertTree, and others, simply cannot get the data that Equifax has. They're boxed out. If you're doing income verification and you put in somebody's name and social security number into Equifax's The Working Number, you have a 50 to 70% chance of getting a successful conversion. For other brokers, it's much lower than that. So Equifax has effectively completely sidestepped the IRS and created its own powerful database that can, according to the government, determine an applicant's social service eligibility or inform child support collections and enforcement. And we can see this market power at work in the pricing, as their CEO noted in December. Equifax has been raising prices substantially for years. How much? Well, like an airline or any firm with market power, Equifax doesn't just have one price. It can engage in price discrimination depending on the willingness to pay. But the price hikes that are public are extreme. In 2017, the price for a single record was $20. In 2020, it was $41.95. Today, it lists its price as $54.95 for a record of where you currently work, and potentially up to $200 for records with more historical information. It's safe to assume these prices will keep going up. What's even crazier, though, is there are often errors in getting your own data from Equifax can be difficult at minimum. Here's a thread of people losing their minds over not being able to get their own data. Here's the story of a Google employee losing it after finding out Google furnishes all employment data to Equifax. The month before that, WAPO reported Apple has for years changed the titles of former employees in the database to associate, no matter if they were a top-level engineer or a mailroom staff. According to one former Apple worker, this error delayed the hiring process at a prospective employer by nearly a week, during which time the company rescinded the offer. This revelation raised questions about the accuracy of Equifax's records and how transparent the service is to employees whose data makes the company more than $1 billion a year. In fact, according to the Equifax website, they made $1.2 billion in Q3 of 2022 alone, while they were simultaneously getting excited about a 39-cent dividend payment to investors. It gets worse, though. It turns out Equifax used the working number to spy on its own staff to find out if they were working multiple jobs, and fired at least 24 workers. This is a huge blow to those working multiple jobs now that remote working is so popular. If an employer doesn't like that, they could simply search you out in the working number database and then fire you. And if you thought it was just a problem in America, guess again. I found a PR Newswire from January 2022, and I quote, "Today, Equifax announced the international expansion of its industry-leading verification services, powered by the company's multi-year investment in the Equifax Cloud," trademarked, "Verification Exchange," trademarked, "a secure, automated, cloud-based service that streamlines the process of verifying employment and income information, is now available in Australia and the United Kingdom, rapidly following the service's rollout and success in Canada and the availability of Equifax employment verification services in India." What's most baffling about this is if this was, say, the IRS that we found out was selling our data, there would be outrage until it changed. Yet here we are with Equifax essentially doing the same thing, completely under the radar. No muss, no fuss, no outrage at all. Okay, that's it. Thanks again to Matt Stoller, Brian Krebs, Showstopper, and others who helped put all this data together for us. Now it's your turn. I'd love to hear your thoughts in the comments below. If you can find any additional data, please link us there. And thanks for watching. Share this with a friend. We'll see you in the next one.